Hello and namaste. This is Neeraj here once again, and welcome back to my channel, Financial Market Analysis Twist by Neeraj Shah. So, in today's video, I would like to discuss something related to iron ore and steel stocks, basically. So, the steel sector and the iron ore, ferrous sector. So, because I was getting a lot of queries regarding that, again, we should get into this, or what is the update on that. So I thought, why not give a detailed update about steel and iron sector. So before starting this video, please request all of you, if you have not yet subscribed to my channel, you please subscribe and push the notification button so that you can get this kind of interesting and informative unique videos as and when I come out. And also I have a different format where there is a premium video series where I come out with the stock specific analysis, premium multi-bagger stock ideas, which are available for each stock idea is available, each premium video is available for only 1,000 rupees per video or $20 per video. So you can contact me in case of any interest. I have come out with very good multi-bagger stock ideas, and which are still in the play quite fantastically in the recent times also. These are the best stocks. So in case of any interest or in case of any queries, you can, for individual or personalized consultancy also, that is also available for the on the chargeable basis. You can contact me. My email details are in the description box down below, and we can then set up this personalized consultancy also through the Skype or through Zoom. So without wasting much time, so let's start. So there are a lot of queries regarding that now. Again, this other metals have started, and kind of Omicron or whatever the pandemic is kind of already factored into the, and it's not so dangerous. So is it the time to look again into the ferrous, iron ore, or what you call the steel stocks? So if you remember, I had long time, much before the market realized, in last June 2021, I had come out with a video. I will give you the links below for whoever has not watched that. That steel stocks have topped out, because the iron ore prices have topped out. So it's time to book profits into those iron ore and steel stocks. And I have been very much proven right, because that time was $225 per ton. That was the top, and I had given that. Right now also I have looked into this, the prices in the recent time, in last 2-3 months, how the prices have moved. Basically, the prices moved from the very low of $83, from iron ore prices from 22 to $225 per ton on the CIF China basis. It had come down to, it has drastically, fallen 70% from the top to almost like $80 after we came out with the video in July, I think July, August onwards. And from that, it was remaining for a few months. It remained like this way, and with this, again, it's bottom fishing, or what you call that, the trading starts. It was a very, and also there's some fundamental reasons also happened in October, November, where the iron ore prices little moved from $85 to 112, and from 112 now it is hovering at around $127 per ton CIF China basis. So main reason was also, that prices had gone down too much. So there was a kind of a trading opportunity for those traders in the wake of, that China had some lockdown. So the production will be disrupted, and because of that, there was a restocking of iron ore was happening, and that is also the boosted the price. Also there was some tropical heavy rain happened in the Brazilian mining region, and that is why also the shipping or the mining had kind of for a few days it had disrupted. So these are the factors. And also, as the new year approaches, what happens is that in China and also in Australia, this is the time where there is kind of a rain season happens now. It's around January, February, around, it's a rain summer kind of in Australia, rainy season. So that is also, anticipation of that, and also that China will be, that Beijing Winter Olympics will be taking place in February, and also lunar holidays of Chinese lunar holidays in February. So it will be kind of a all this in anticipation of this, basically because those the time there are holidays. So this kind of a, what do you call, the restocking happens, meals and the traders in the anticipation of holidays and all this Olympics and some kind of a closure, they were restocking this the stocks. So that is what the trading was happening, and that's why that iron ore prices, from the bottom $83 to went up to say $127, and also that steel prices also moved, from around 10% from the bottom. So that was the kind of what you can see, that the 4,000. It was below. It had gone below $700 in the China. I'm talking about the FOB China basis in the Chinese market for the for this what do you call the billets and the HRC kind of semis. So from that bottom it had gone up to say $750, $760 in China, so around 10 to 12% from the bottom the prices have moved up. But that's it, there's fundamentally there is no much more reason for the prices to go up. It was more of a technical and restocking and all this, all the other commodities were moving up. But as we have told in many of our videos that the steel and iron ore prices have topped out. Maximum what you can see is that it will remain in this range of plus minus 10% of this current prices. So if you look at the iron ore also, maximum what I see is that $140 from $127, it can go up to $140 per ton, so around 7% of the upside. And in the same way the steel prices, I don't see more the upside than the 4 to 5%. Looking at the demand and also the raw material pricing and supply situation, I don't think so that this iron ore and steel stocks have because generally what happens is that this steel stocks and iron ore company, these stocks that move along with the increase or decrease in the price of the raw materials and the basic steel. So if because that is where it gives a huge boost. If the prices goes up by 10%, you can see that earnings can increase by 20 to 25%. It's a multi-bagger, multiple effect of the earning. It's not the simple. It's not a linear, but it's a multiplier effect on the earning, and that is why the steel stocks and iron ore stocks move along with very fly off like this way. But I don't think so that situation is going to happen very soon. Okay, so this year also you are not going to see that. That is why I have told that there are the prices of some metals like nickel and palladium and silver and what do you call even aluminum, which had not moved, and zinc, which had not moved for quite. There is a scope for those metal prices or for the trading opportunity in those, because they are much low, they are much way off their historical highs, which these metals had reached at certain point of time in the history in 2011-12 around. So summing up all these things is that people who may be thinking, oh, Tata Steel, because one fundamental gyan or one fundamental thing to watch out for the steel stocks is always, I give you, this is my tip of all these years of working in the industry and my basic ground level knowledge, is that there is fundamentally steels, it's not like that Tata Steel is making some kind of a exclusive steel or JSW is making some different steel, and Tata steel is used in 40% of the steel of the automobile, and that is so that it doesn't move like this way. Steel stocks, or in the stock market parlance, if you look at this metal, particularly the steel stocks, they move early along with the price of the iron ore, coking coal and the steel. If there is a price rise into this, the stocks will move up. If there is no price rise or fundamentally we don't see that that price is going to rise much more from that, the stock will not work, because earnings will not have much difference. It's only earnings are dependent on the prices, so because it's a global commodity, so and the steel is it's a commodity, so it's nothing like this way that there is no kind of a branding, or it doesn't matter, that way. So those people who are thinking that, oh, I should buy, it is doing fantastically well in Europe, will come out with Tata Steel, Europe will come out with this fantastic results, and it doesn't happen. If the prices are almost going to remain in the same level, because it's a global commodity. If prices rise somewhere very much, so then from the low price area, that steel will be exported to the high price area, and the prices will come back to this balance. So both will come back to the same level. So it's an equilibrium which places the role. So nothing like that Tata Steel or ArcelorMittal or all these things. Only which make difference is that how efficient of the steel production process is there. So how much is the conversion cost. So that way their margin, a little bit better than the other steel companies, and then you can look at it giving little higher multiples or higher discounting to that company. But if the fundamentally the steel prices are going to remain in the same stable zone, or not much, the price rise is not going to happen, the stocks will not do much. And that is why my basic advice is to all of these viewers is that you can very well get out of the steel stocks, iron ore stocks at this point of time, where if it has rallied, this is the very good time to book profits from all these steel stocks and iron ore stocks, irrespective of whatever they may do. Okay, and when it will be the time, again I will let you know, as you know that okay, there is a fundamental, again this rise is started, and it's time to look into this thing. But till that time to get out of all the steel stocks. That's it from my side. And if you like this video, you please put a like, share it with maximum friends, and we'll see you once again next week with some other interesting and unique ideas. Till that time, ciao from Neeraj from Moscow, and love you all.